Short exercise 3-8, adjusting entry for depreciation. On May 1st, Janica Clothing Exchange paid cash of $54,000 for computers that are expected to remain useful for 3 years. At the end of the 3 years, the value of the computers is expected to be 0. So we can read all the requirements here or as they come up. So requirement 1, we have calculate the amount of depreciation for the month of May using the straight line depreciation method. Identify the formula needed and calculate the amount. So what is the formula in words for straight line depreciation? So you need to take the cost of the asset, then you subtract residual value, and then you divide by useful life. And in this case, it is useful life in months. So let's go ahead and get our calculator open to figure out what that amount is for this problem. We've got our cost. We paid cash of $54,000 for these computers. So we're going to take that cost, we're going to subtract out the residual value, which is expected to be 0 at the end of the 3 years. And then that is the amount that they think they can sell it for at the end of the useful life, and that's 0. So then we take the useful life of 3 years, but remember this 3 years is in months. So we multiply the 3 years by 12 months to get the months. So that's 36 months that we are dividing by for the useful life here. And that is going to give us $1,500 of depreciation per month. And please remember, the residual value is just an estimate. It is a guess, as well as the useful life. So depreciation is not an exact science, it's just an estimate. So let's go ahead and check our answer. Nice work. Okay, and then for requirement 2, we have record the adjusting entry for depreciation on May 31st. Record debits first, then credits. Select the explanation on the last line of the journal entry table. So now remember, depreciation is an expense, and expenses are increasing as almost always. So how does an expense increase? It increases with a debit. So the debit account here is going to be depreciation expense for computer equipment here. They have it specified, and then that's going to be a debit for that $1,500. And then we are going to need a credit account. And now here's what a lot of students try to do. They will try to lower the computer equipment, the asset, directly, but you're not allowed to do that. So here is a screenshot from our lecture. Notice when we're doing this for the truck, I put a big X here to tell you that we cannot lower the truck value directly because we need to keep this cost of the asset, the truck in this case, and the computer in this problem, in this exercise. We need to keep the original cost there and not lower it at all because we need to know the historical cost of the asset. So instead of lowering the truck account here as the example from the lecture, we're going to put that, in this case, by $1,500 in the accumulated depreciation account. So that will be our credit here. So accumulated depreciation, computer equipment. And what type of account is accumulated depreciation? It is a contra asset. And so here's our expanded accounting equation. I've now put the contra asset below assets because contra assets offset, or they're the opposite of assets. So notice the plus sign is on the opposite side. So as accumulated depreciation gets bigger and bigger, it needs to get bigger on the right side, which is the credit side, which I am crediting here in the journal entry. And then we will need an explanation here at the bottom. So that's going to be to record depreciation on computer equipment. Let's go ahead and check our answer. Good job. Okay, so now requirement 3. Post the purchase on May 1st and depreciation on May 31st to the T accounts for the following accounts. So we have computer equipment, accumulated depreciation, computer equipment, and depreciation expense, computer equipment. Show their balances at May 31st. Use dates as posting references to post the transactions. use a balance posting reference to show the ending balance of each account. Now notice here they don't have the cash asset account here, so we're going to ignore cash, but then we have to remember that on May 1st, we paid $54,000 for computers. So in the real world, you'd also have AT account for cash and you would lower that. But that's not the emphasis of this problem, so we're going to skip it and we're going to post these entries to the accounts that we do have. So again, computer equipment on May 1st, we increased that by 54,000. So that's posting the purchase, which is the first requirement here. Then we have depreciation on May 31st, which again we recorded above, and we can follow along how we did that in the journal entry. So we had an increased depreciation expense for computer equipment of $1,500 as a debit. And again, that's May 31st as the posting date. So that's depreciation expense on May 31st, increasing with a debit of $1,500. And then in that same journal entry, we have accumulated depreciation on computer equipment, a credit of $1,500. So we'll scroll back down here. And again, that's May 31st as the posting date and $1,500 as the accumulated depreciation on computer equipment. And notice how they put the computer equipment account right next to the contra asset account of accumulated depreciation. So these two accounts will be side by side in a lot of different places in the chart of accounts, on the balance sheet, and on the trial balance. Okay, and then now we need to calculate the balances. So we have a balance on computer equipment for $54,000. Accumulated depreciation, the balance, $1,500 on the credit side, and then for depreciation expense, we have a balance of $1,500 on the debit side. So let's go ahead and check our answer. Fantastic. All right, now for requirement 4, they want to calculate the computer equipment's book value at May 31st. Now, do you remember what the formula is for book value? It is the cost of the equipment minus the accumulated depreciation. We're going to put in the computer equipment here first, and then the accumulated depreciation second here, and that's going to give us the book value of computer equipment. So again, the computer equipment's value at the beginning is $54,000. That is what we paid for it. And then less the accumulated depreciation, which again was $1,500. So that is going to go right here. And then we subtract that out, and that's going to give us a total of $52,500. And this one you can make negative or leave it positive as long as you remember to subtract it here in the book value. Since we are saying it's less that amount, my accounting lab won't count it incorrect if you just leave it positive. But again, when you go into their solutions, it does show that this is a negative number. So let's check our answer. Fantastic. So what does this book value mean? Does it mean that we could sell these computers for exactly $52,500? No, that's not the purpose of depreciation. The purpose of this depreciation and the accumulated depreciation is to show that over time our computers are losing value. And now for computers in the real world, they don't really wear out so much as they just get obsolete. And obsolete means eventually there will be a new type of computer that will be faster and will be more capable. So eventually these computers, and probably in about 3 years according to this company, they are probably going to have to get new ones and get rid of the old ones. So this $1,500 of accumulated depreciation is just trying to estimate how much the value of the computers has been going down. So they were worth $54,000 and they've dropped by $1,500 approximately in 1 month, and now they are worth $52,500 on our books. And remember, book value just means the value on our accounting records. So on our balance sheet, we would show that the value of our computers is this $52,500. And then another reason for this recording of depreciation is we can take the expense of depreciation, the depreciation expense, on our income statement, and it will lower our profit. So that will save us some money in taxes. And that's it.